All right, everyone. This is actually coming out much later than I had anticipated because I keep pontificating. My apologies. Okay, so let me get right to the point and try and make this quick and painless. First of all, when I was talking about the news that was out yesterday, what I wanted to, I think I had mentioned Thursday. I was thinking Thursday when I should have been focused on Wednesday. You could see Wednesday as well today. We had a ton of announcements here at the beginning of the day. They were just packed in. And you can see that the news announcements started right about here and pretty sedate in the morning. Okay, the Fed Challenger job cuts were fairly sedate. It's not that big of a deal. ADP employment, something that traders have been looking at more, and for the first time since this thing has been out, they actually had this huge drop. And you can see when you go back up here to the 15-minute chart, there's actually a gap here from the time that they announced this at 8:30 to the next bar. So the pound gapped up, and then it was off to the races after that. The rest of the announcements pointed towards really the Fed getting more in mixed signals. The Fed is getting pressured on the inflationary front, but also on the slowdown front. And Bernanke, I think, is in his mind possibly caught between a rock and a hard place. And I apologize for kind of projecting into Ben, but that's coming from, my opinion is we need someone like Volcker in there to jack interest rates up to 23%, get this credit stuff out of the system. As harsh as it may seem, we need to pressure the people and the assets that were gotten with bad credit, bad risk, get them out of the system and basically hit the reset button, which is what happened in the 80s. So here's Thursday. We've got the interest rate decision from the Bank of England, ECB interest rate decision as well. Both of these guys are, if anything, looking to have language that says they're going to raise rates. Inflation is a problem over there. Again, mixed signals coming into the European Union simply because their currency is so high, they might as well have hiked rates. So they're caught between a rock and a hard place as well. Very, very volatile situation. Listen, I don't want to sugarcoat this, everybody. We are very close to big meltdowns in the financial arena. We've got huge credit problems. I can't stress this enough. In fact, I was on the phone today with Campbell, who was in Dallas, and we were talking about Dallas, and he was talking about how, well, I didn't really think that the 4 dates panned out, and my answer to him was basically, well, the banking system fell apart between October and December, so all bets were off. I mean, I knew that the credit situation was starting to melt down, but listen, folks, we've had bank failures in the UK, we've had bank failures in Germany, bank failures in France. The European Union is having major problems with its economies. The U.S. economy is having major problems. The credit situation is, from what I can read and what I can tell, teetering on the brink of imploding. Okay, so don't take it too lightly that things have changed. Okay, we've got to mentally keep ourselves in the game, know that we're going to get